Introducing EquitiesTracker.PLUS Analyst. Welcome to the EquitiesTracker.PLUS Analyst investment system. My name is Lucy, and I will be your host for this demonstration. The investment system is based on Benjamin Graham's 3 investment principles, namely, adequate return, thorough analysis, and safety of principle. I am now going to introduce the key features of EquitiesTracker to you. Firstly, log in at EquitiesTracker.com. After logging in, navigate to the Tracker Analyst map link at right. This is a new all-in-one menu system that contains the direct menu link to all features of EquitiesTracker. With adequate returns, we always have to begin with the end in mind and set our compounded returns targets. Each person's compounded annual growth rate or CAGR target is different. For example, a single 30-year-old person with an initial investment of $50,000 planning to retire in 30 years, at the age of 60, will probably need only $2 million to be comfortable. Using our CAGR or CAGR calculator, this person requires a CAGR target of 13.1%. This means he or she needs to look for a portfolio of investment-grade stocks that can consistently provide him with an annual return of at least 13.1%. This leads us to now look for a short list of stocks using our generic filtering systems. The market price ratio filter allows one to filter stocks based on continuous years of net profit, yearly dividends, yearly operating cash flow, dividend yield and price earnings ratio, just to name a few. The accounting KPIs filter allows one to filter stocks based on profitability performance ratios, investment market value ratios, liquidity ratios, gearing solvency ratios and efficiency ratios. The low-high ranking filter allows one to filter stocks based on its average annual volatility over 3 or 5 or 10 years or over its full history. This gives one an idea how much one would theoretically gain if one enters at the year low and exits at the year high. The high-low ranking filter allows one to filter stocks based on its average annual volatility over 3 or 5 or 10 years or over its full history. This gives one an idea how much risk or paper loss one would have to take if one enters wrongly at the year high. The subsector filter allows one to filter for stocks in 82 different subsectors or industries, allowing close comparison with competitors. Once a list of stocks have been shortlisted based on the various filters mentioned above, these stocks have to pass through 3 very important filters, namely FQA or franchise quality analysis, DD or due diligence, and SWC or shareholder wealth creation. The FQA filter considers the following characteristics of a franchise. Firstly, customers are willing to pay more for a product or service. Secondly, these companies are usually the most profitable within the same industry. Thirdly, companies with a strong franchise value will grow over the long term. And finally, such companies have a strong economic moat or high barriers to entry. So how do we determine franchise value? Firstly, we consider continuous and uninterrupted stream of net profit. Secondly, continuous and uninterrupted stream of dividends to shareholders is considered. Thirdly, we take into account a continuous and uninterrupted stream of operating cash flow. And finally, we also consider continuous and uninterrupted stream of free cash flow. The Due filter covers multiple indicators over the number of years in which the company has been listed, namely financial sustainability indicators, performance change indicators, and cash position change indicators. The SWC filter, it sorts stocks based on its price CAGR ranking over 3 or 5 or 10 years or over its full history. This gives one an idea how much one would gain during these corresponding buy and hold periods, and whether it meets one's individual CAGR targets. In essence, shareholder wealth creation is a direct result of effective management over the long term, whether the management's interests are aligned with shareholders' interests. So how is shareholder wealth created? We believe as long as net profit increases over time and dividend yields increase over time, or retained earnings increase over time, the share price will also increase eventually. As a final check, one can access the Tracker Analyst Company Summary via the home page. Type in, for example, Nestlé to see a summary of a long-term chart, adequate return, low high volatility, Due basic score, FQA score, SWC score and safety of principal high-low volatility. If the summary fits all Ben Graham's criteria, the stock can be moved to the radar screen for monitoring. The radar screen is where shortlisted companies who meet all criteria are monitored. Simply select the company name on the available stock list and click Add. The company will appear on the subscribed stock list. Click on My Radar to see the entire list of selected stocks. Note that My Radar will provide the following information like day's closing price, rolling 4 quarters earnings yields versus its historical average high and its historical average low, and related news briefs. Tracker timing will help time one's entry and exit. This is crucial if one wants to maximize their returns. We have developed several timers, namely the earnings yield oscillator based on one standard deviation of the entire universe of data available, price to value timers, dividend dates and price volatility. Last but not least, it is important to keep track of your portfolio via the portfolio setup. This is good for backtesting simulation before committing to an actual investment. This is a preview of the entire EquitiesTracker.PLUS analyst investment system. For a full understanding and explanation of the system, please register for our courses at EquitiesTracker.com. See you soon.